We're here for what is technically the first quarterly performance update of 2026, although we have been here before this year recording the last quarter of 2025. James, if I could jump straight in with you, we're a year on from the tariff fallout. How have the Courtiers funds performed this quarter?
It's been a really funny quarter, sort of a tale of two halves, or rather 2/3 and 1/3. You may remember this time last month we were sat here saying how amazing markets have been so far. Then come March and suddenly there's a war in Iran and we get a huge spike in market volatility. So the US, the key US index, the S&P 500, that's down over 4% for the quarter. Similarly, European stocks, they're down over 3%. And UK sort of medium and small cap stocks, they've had a really tough quarter as well. They're down around 4 or 5%. However, the funds have actually generated a positive return for the quarter. The balanced fund and the growth fund, they're both up around 0.5%. And the cautious fund is up 0.4% as well, which shows you the benefits of diversification. Some markets that have actually done okay in the last quarter are UK large cap. So the FTSE 100 index, that's up over 3% for the quarter. So the fact that the funds have still managed to generate positive returns in this huge spike in volatility that we've seen because of the conflict in Iran just shows how important it is to be diversified.
Could you give me an example off the top of your head what might have been a tricky, challenging investment decision going into this quarter? What might investors have been in that would have caused them to suffer?
Well, things which have been especially volatile are long-dated gilts. So one of the impacts of the conflict in Iran is because of the massive shortage of oil that it's caused. We've seen a huge spike in the oil price, which has completely changed inflation expectations. Because inflation is now expected to rise, interest rates are also expected to rise. I think, just over a month ago, we were forecast a couple of rate cuts during the year, and now we're expecting a couple of rate increases instead. So if you're heavily invested in long-dated bonds, that would have hit you as well. Interestingly, there's also been a huge spike in volatility of gold. So gold normally acts quite defensively when you see these spikes in volatility, but gold actually lost 11% last month. The volatility of gold is actually around 3 times higher in the last 90 days than the volatility of equities.
Jay, can I go back to oil? That's at the top of the written report this quarter, when it's normally at the bottom.
Well, it has been buried down there. So each quarter, James will hand me 47 market performances, and we look at that. And last year, we obviously do the quarter, and we sum up the year. That's when we're here in January. And oil was the only negative asset on that sheet of paper last year. So now we're here, it's up 94%. So, we talk about the market pendulum where that's a very, very, very rapid swing. But obviously, as James said, the funds to the end of February were doing really well. 28th of February, Israel and the US has struck Iran, and then that's created a shortage of oil because they have used their weapon against the Western world, which is to block the Strait of Hormuz. Now, it's not as bad as it is in the 70s. So oil price spikes caused recessions in the UK and US in 1973, in 1979, and in 1990, all for similar but different reasons. In 73, there was the Saudis did an oil embargo on the Western world, and that was very, very painful. 79 was actually the Iranian Revolution, and that just caused an actual supply delay because the government that took over didn't run the refineries as well. So that was an interesting one, and one that hurt the UK. But nowadays, back then, 60% of oil went through the Strait of Hormuz. Nowadays, only 20% goes through the Strait of Hormuz. So you've got that to fall back on, which means it's less painful. However, if you lose 20% of your market supply, there's going to be spikes, and also there's market dynamics that are emerging, particularly in each country. So diesel prices in the UK have shot up. It's not an illusion. I don't know if people listening to this drive a diesel. It's not an illusion that it appears to have gone up way more than petrol. It's because we've got no diesel refineries in the UK. So stuff like this, if you have to import that, people don't really want to export it to you right now because they're worried about their own supply. So there's these interesting things cropping up that really bring to light policy decisions of the last 20 years, and you see in a crisis how they actually manifest as price shocks.
Is it fair to say that the 20% of world's oil passing through the Strait of Hormuz now compared to 60% in the 70s would be a fair example of diversification?
Yeah, definitely. I mean, we spoke Q2. I think the Q2 report last year. I know it was the Q3 report after the 12-day war, which was the initial strike by the US. I think one where Trump probably thought that went so well. Let's this one possibly will be over really quickly as well. And that was when they dropped the bunker busters on the Iranian, what believed to be the Iranian nuclear facilities, the enrichment program. And oil spiked then, but we talked about how that actually went straight back down again because the dynamics are different in this day and age. US have become a net oil exporter. Back in the 70s and 80s, they were hugely dependent on imports. However, these markets do clear at international prices. So if there is a lack of supply across the globe, the people in the US will be getting hit with higher oil prices as well, even though they are a net importer, but it won't be as bad as countries that are, even though they're a net exporter, it won't be as bad as countries that are net importers of oil. They're the ones that really feel this. But the dynamics have changed partly because of fracking. The US added 8 million barrels of oil a day through fracking over the last, I think, 10 years. And that's the equivalent of adding a Saudi Arabia of supply to the world. And that's why the oil price kept going down. There was oversupply. Now there's not right now. But hopefully it's like 5 years ago where the Ever Given had blocked the Suez Canal. Hopefully this is just a blockage. All the facilities are good. And once this gets open, it will be a little bit of time because obviously these ships take a long time to get to the UK. But
sure.
once it's unblocked, hopefully we can go back to lower oil prices.
Yeah, and there's a deadline looming, isn't there, for basically Wednesday the 8th? What's going to happen? So markets are holding steady right now, waiting for an answer.
Then it'll be Thursday. Then it'll be Friday.
Well,
I have to admit, I was slightly nervous coming in this morning because as much as we love a 4-day weekend, it does mean that when markets open on Tuesday, they've got 4 whole days worth of news to catch up on. And 4 days is a long time at the moment.
And what did it look like?
It was actually okay. And there's actually some green on the screen, which was quite nice to see.
Excellent.
But I wasn't as nervous as Rajat was, an analyst in our team. He's getting his CFA level 3 results today. So he's sort of on 10-6. I think it's coming in about an hour. So if he fails, then edit this bit out. But if you're watching this, he passed everyone.
Dominoes.
So, well done, Rajat.
Well done, Rajat.
Yeah.
Dominoes all round. Oh, well done. Good luck. James, if I can come back, we did touch briefly on what might have been challenging investments heading into all of this. Just can you tell us any more about what does well and what does badly in times like this?
Something which does act quite defensively during times like this is the dollar. So the US dollar has appreciated against the pound by nearly 2% in the last quarter. But in some of the other traditional safe havens, like I just mentioned, gold earlier on, that hasn't done so well. Although interestingly, even though it is down over 11% for the month, it's still up for the quarter. It's still up around 8%, which just shows how volatile gold has been so far. And similarly, other defensive assets such as government bonds, they've also not done so well, just because of all the changing inflation expectations. So it's been quite a strange time, but I know I say this word a lot. It just again show the importance of diversification.
Yeah, well, we can't hammer it home enough. Yes, excellent. This, with all the rising costs closer to home, has led to this dubbing of the term "awful April." Jake.
Yeah, I see it cropping up a lot in the news at the moment. It's not a great way to introduce April, is it?
Anything for us to be cheerful about?
Yeah, well, things come to an end. Oil price appreciation ends up in oil price depreciation. That's what always happens. So we will watch the stuff that's done well in the portfolio because of the conflict and see wherever it's a good position to exit. But the performance, as James alluded to, is really strong. But further, despite all these things seem to happen at the beginning of the year at the moment, September is meant to be the worst month for markets, but actually it seems like February, March and April are really trying to take the crown off of it.
Setting us up for a nice September.
Yeah, it's a nice September because COVID obviously happened in March.
Splendid September. Superb September.
Yeah, that'd be nice. So Silicon Valley Bank happened earlier in the year. We had, 2024 we had the August 5th sell-off that James spoke about at the seminars. Also in 2022, we obviously had the Russian-Ukraine crisis. So these things always seem to happen at the beginning of the year at the moment. But hopefully next year it won't be as bad. But in these times, it's interesting talking about the 2022 conflict because Germany had to get itself off of Russian gas very quickly. By the end of 2022, they completely cut it off. It was over 50% of their imports. In the space of 200 days, they built a liquefied natural gas terminal, which shows, it's a real message to our government. It shows that when you really need to do something, you can get it done, especially when you think about the housing crisis in the UK. But we're seeing that so the world runs on about 100 million barrels of oil a day. 20 million of those come through the Strait of Hormuz. Even by March, the deficit was only 15 because we found new ways to reroute it. And then by the end of March, beginning of April, it is estimated that that's down to only an 8 million deficit because of more human ingenuity. And so it's great that you see these things. And actually, do you know what? That won't just reduce the dependency on the Strait of Hormuz in the short term, that will reduce it in the long term as well, because obviously if Iran are going to use this as a weapon, then people will want to find ways to make sure that it can't be weaponized against themselves.
Yeah, and not discounting all the shock and atrocities. We're hopeful that this will teach mankind to think smarter and be smarter.
Yeah, and you think about all those conflicts that we've had at the beginning of the year over the last 5-6 years. Despite that, the growth fund over 10 years to the end of February was compounding at double-digit returns. And so you just got to look through this, ride out the volatility. Volatility is the price you pay. As James said, we diversify and we go on. But there's one thing that is good, and I know that net zero gets a lot of flack, and there's lots of criticisms with our UK energy policy, but God bless the wind last week because it was producing about 48% of the UK power. So those strong winds that were knocking over your garden furniture was also powering the UK, and that reduces our dependence on gas. So at the moment, because obviously gas is tied up all into this conflict. So God bless that, and then that was helping us out.
I was going to ask if we're invested in any outdoor furniture businesses.
No, but we are invested in wind farms. So they're recording record production, and there's two small positions in a solar farm, and they're getting great output, and they have government-backed revenue, and then they estimate over the long run that they can produce power at about £40 a megawatt, and that's much cheaper than the prices that we're paying at the moment.
Well, thank you for the insight. James, anything that you'd like to add for this quarter?
One other interesting stat I had is that the Strait of Hormuz's Wikipedia page had 171 times as many views last month than it did in December. There you go.
90% of this was me trying to learn how it was.
I think everyone was doing that, yeah.
I always thought it's interesting if you could see what are the most top 10 Googled or searched for phrases or words in the world right now, you'd know what the world's most interesting points are.
Definitely.
What's the world most interested in at the moment? I wonder if Artemis 2 could see that.
Yeah.
Thought bubbles. Anyway, back to Earth. Jake, anything you'd like to add before we wrap this one up?
No, I think we've covered it all. I can't. Just looking at James's all market returns, but I think we've spoken enough.
Hopeful into the next quarter.
Yes, always.
Fantastic.
Thanks, Leo.
Well, thank you both very much for your time once again. I look forward to catching up with you next month, James, and you both together for the next quarterly.
Thank you, Leo.
If you do have any questions, please do speak to your advisor or contact us through the website. Thanks.